I think silver is going to skyrocket. In my speech, I suggested that Michael Oliver, who writes the Momentum Structural Analysis, I think his ultimate target's 250 on silver.
250?
250, yeah. And I believe it. And there was another gentleman, Don Durrett, who analyzes small cap mining companies, and his target was 500. And I can see both being entirely possible here, because I know the targets on gold were like 8 to 10,000. The big impact it might have is that the whole world economy is going to shrink if we've all got to deal with tariffs, okay? It's going to be a nightmare for everybody. So if the world economy shrinks, maybe the ultimate bear market evolves quicker, and a bear market is the best thing that could ever happen to gold and silver.
Silver prices have been under manipulation for the past 5 decades, but according to renowned investor Eric Sprott, a breakout in silver's price, with a target range of $250 to $500, is entirely possible. While gold has seen significant growth this year, silver has struggled, with prices languishing for the past 9 months. This has led many investors to question whether silver will always play second fiddle to gold, or if it's finally poised to shine. One key signal that silver is preparing for a significant rally is its movement above the $32 to $33 resistance zone, which has acted as a ceiling for much of the past year. This breakout is an encouraging step, but a more decisive confirmation will come when silver can close above the 34 to 35 level, the resistance that halted the late October rally. If silver can sustain a strong, high-volume close above these levels, it will likely open the door for a powerful bull market. The combination of technical factors, supply constraints, and increasing demand for physical silver could create the perfect conditions for a dramatic price surge. However, for this breakout to be valid, silver needs to hold above these zones. Otherwise, the rally will remain uncertain, and the market will be left indecisive. Sprott predicts that silver's price will surge due to a technical deficit, where demand is outstripping mining production. He cites the bullish targets of other analysts, such as Michael Oliver's $250 target and Don Durrett's $500 prediction, as entirely plausible. Sprott also highlights the current gold-to-silver ratio, which stands at around 90 to 1, as being artificially distorted. He believes the ratio should revert to a more historically typical range, possibly as low as 15 to 1 or even 7 to 1. With gold prices expected to rise well above 3,000 and silver's potential to reach over 50, Sprott is optimistic about the outlook for precious metals, especially as the year progresses. We present the clips of Sprott's insights from his recent video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
And I'm looking all the time, every day. I look at 2 or 3 companies, probably more than that. Of course, I know a lot of them already. The fact that they're in silver and gold, of course, that's the first check mark. One of the other check marks I love, by the way, is that nobody follows them. No brokers follow them. That's a perfect one. And because I'm just assessing what the ore body's telling me, okay? And I know the price of the product. Now, how good's the ore body? So I don't think it takes a lot of time to realize how undervalued it could be. And I'm a patient investor. So, as I say, when I look at a NAV, I can find lots of stocks trading at 1/10 of NAV. And the NAV calculation is typically a very conservative calculation. You know, they take the price, and like a lot of guys use 2,000 as the price for gold. Well, it's 2,900. That means the NAV is twice what you're telling me it is, just based on price. So it's not too hard to find things that are of interest. I'm only buying a company because I think it's dirt cheap, okay? And I know I could buy more. Let's say I put $2 million in. I know I could put a hell of a lot more than $2 million in, okay? And if $2 million took me to 9.9, fine. Maybe I'll go to 19.9. Then I gotta. It's not my choice to go above because I gotta have an opportunity to go above. I'm gonna hold them for a long time because every time I buy them, I think they're just dirt cheap. You know, that I could have a 10 or 20 bagger here. So I'm in no rush. I have half the things I own. I don't even know I own them. You know, and then a news release comes up. Do we own that one? Yeah. Like if it's got silver in front of it, I normally own it. Okay. Anything to do with silver. You imagine the silver goes to some of those targets I mentioned. You can own any one of them.
Yeah.
And you're going to do well. I don't think it will have any impact in gold and silver, other than one perhaps. The big impact it might have is this whole world economy is going to shrink if we've all got to deal with tariffs, okay? It's going to be a nightmare for everybody. So if the world economy shrinks, maybe the ultimate bear market evolves quicker, and a bear market is the best thing that could ever happen to gold and silver. Those stocks go up when everyone realizes nothing's working, because gold and silver will be working.
Over the past year, silver's price has remained suppressed despite the strong performance of gold, largely due to the heavy short selling of COMEX silver futures by bullion banks like JP Morgan and UBS. These banks intentionally capped silver prices by amassing a massive net short position of 30,233 futures contracts, equating to 151 million ounces of silver, about 1/5 of the annual global silver production. This manipulation, where much of the short position is naked, unbacked by physical silver, exerted considerable downward pressure on silver prices. However, if silver manages to break through key resistance levels, it could trigger a wave of short covering as traders who bet against silver would be forced to buy back their positions as prices rise, further driving the rally. The risk of a short squeeze is growing, given the size of the short position and the ratio of 378 ounces of paper silver, such as ETFs, futures, and derivatives, for every ounce of physical silver. In the event of a short squeeze, holders of paper silver could be forced to scramble for the increasingly scarce physical silver, driving the price of physical silver to potentially unprecedented levels. This situation is further compounded by the persistent silver supply deficit, which has grown as demand consistently outpaces production. In 2024 alone, the shortfall reached 182 million ounces, with an additional deficit expected in 2025. As demand for silver continues to rise across various sectors, especially in renewable energy and solar panel manufacturing, silver's price could skyrocket, signaling a significant shift in the market dynamics.
And I came to the conclusion that gold and silver would be the answer, both the physical metals and the shares. So as the bear market unfolded, we were short the market, we go long gold and silver, and I had probably my best years ever in 2001 and 02 in terms of performance. And a lot of it from gold. Gold stocks from 2000 to 2011 went up 17 times. That's such an absolute crazy outperformance that it differentiates. And I'm still in it. I was making the comment in my address that 3 or 4 Mondays ago, gold and silver were up strongly. I purchased gold and silver in 2000, still had it, every ounce.
So that's what, $230, $280 an ounce?
Yeah, well, 260 or so, yeah. And based on the change in the price of gold and silver that day, 3 or 4 weeks ago, I made 30% on my original investment that day, which is a statement about patience and holding on and believing. And of course, as the price goes up, now it's 2,900. It's easier, right?
So your smile gets bigger and bigger.
You know, like a day like today, you're up $25. Okay, I don't want to put what that would be. That's 10% right there on my original cost. Except the value of it's gone up by 10 times. So you get it. Well, it's fun to go on a search. I describe my investment policy as stealing value. So you're always looking, and you know that the market is so massively imperfect that if you can find something, particularly in precious metals these days, they're so inexpensive. I mean, I pretty well every company I would look at, if I was to look at it, their net asset value versus their stock price, and these are smaller companies, they're probably all 10 to 1. You know, it could be a 10-bagger. If it ever makes its NAV, which is a conservative calculation, it could go up by 10 times. Well, what if the deposit gets bigger? What if the price goes up? The price of the product goes up? You know, it could be an easy 20-bagger. So that's a nice opportunity to create value for the family office. That must have been a fake picture, because I can't imagine me with a wheelbarrow full of gold. They were making fake pictures back then. But obviously, I was a believer, okay, and I was a proponent and outspoken about it. You realize that, well, gold had gone down a lot. I mean, what was the high? Was it like $1,000 in 1980, and here we're in 2000, it was 250. And well, if that goes back up again, and maybe a little extra, and it did. It went up to almost $1,900. There can be one hell of a payday. And of course, I was also a great believer that the stock market was very, very vulnerable, which of course it was. And that was the biggest takeaway from it, that, NASDAQ went down 80% back then. So you had to avoid that as a portfolio manager.
While most investors continue to overlook silver, it is well positioned to thrive and catch up to gold's soaring price. Silver remains incredibly undervalued by multiple measures, including the gold-to-silver ratio, its inflation-adjusted price, its price relative to the M2 money supply, and the persistent supply-demand imbalance, with physical silver demand outpacing supply for over half a decade. For these reasons and more, silver is unlikely to stay this cheap for much longer. The market's current technical indicators further support the belief that silver is on the verge of a significant breakout. If silver can clear key resistance levels, it could experience a powerful upward movement, taking it into a phase of accelerated growth. With strong fundamentals and technical signs pointing toward a breakout, silver is positioning itself for substantial growth shortly. Silver could gain significant momentum once these resistance levels are broken, potentially reaching new heights. That's it for today. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video.